Mark, I got to start with a great story you guys did this week about IBM, a company that Alex used to cover. IBM came out with a press release during the president-elect's sort of transition period, saying $1 billion in spending on job training, and they're going to hire tons of people, right?
Yeah, 25,000 jobs they were touting.
And yet, this is while they're actually laying people off.
And yet, they just so happen to be doing multiple rounds of layoffs, potentially thousands of people that they just did their third round in late November. We reported, and so, I mean, it sort of shows that a lot of this is all for appearances, sort of political theater, and you know, the actual job numbers aren't so clear. And
it comes at a time, Alex, as you know well, the company's got 19 quarters in a row of declining revenues and things at IBM maybe not looking so positive. The company's smaller in terms of revenues, profits, and headcount.
That's right. I mean, they are focusing on these new areas. They're focusing on basically all of the cloudy stuff, but the older things that they're selling, that revenue is falling faster than the new stuff can make up for. And look, you've heard Ginny Rometty over the past 5 years talk about we're remixing all of these people, we're moving these people around, but this story is a story we've seen before for them. They've promised to hire people in the Midwest, and then they fired people. They've promised to expand in different areas. So it's
the way that IBM says things.
Exactly, and the timing, you know, is interesting with Trump now being the big job promoter.
Maybe the advice for people following IBM is follow what they do, not what they say. Maybe that's good advice for following all companies.
Proof is in the pudding.
So to that cloud notion of proof being in the pudding, I was really struck by by Google's Alphabet results of all the companies that reported yesterday. I really felt like, you know, forget the quarter and the analysts, that you see a company where even fourth quarter revenue growth was single digits 3 years ago, 22% revenue growth for one of the biggest companies in the history of the world. I was just amazed by that.
Yeah, they showed a lot of growth. I mean, that was sort of the theme in many of the earnings this week, was the growth in cloud and sort of the promise of a lot of profit coming through this, like, cloud computing, server storage industry. You also saw that in Microsoft's earnings and Intel to some extent, with all these companies buying servers.
And cloud, you know, it's interesting. You refer to as cloudy stuff. I would say there's some more clarity from a lot of these companies on what's, or at least that they're focusing on.
Not with Alphabet, they group it in other, right? It's the other category. So, you know, it's going to be all these things delivered as a service. And to your point, Office 365 at Microsoft, Azure and Microsoft seem to be doing well. You have the company talking about margin improvement. And that seems to be the theme with a lot of the enterprise tech companies. They spent so much over the past few years trying to ramp up on having data center capacity, selling things like Intel does that play into data centers. And now it seems like some of that is shaking out, and we're seeing kind of the fruits of those labors. Speaking
of which, you know, so Elon Musk shows up at the tech summit where all those people, 20-some people, gathered in a room with the president for a short period of time. And yet the stock, with no other changes in the business, indeed missing their fourth quarter and year-long goal for shipping cars, stock, as we mentioned, is rallying quite a bit as part of this Trump rally.
Yeah, not many changes in the business itself, but a lot of changes in the political environment. I mean, Elon has very quickly developed this relationship. It doesn't hurt to have his relationship with Peter Thiel, but developed this relationship with Donald Trump.
Point, Peter Thiel at PayPal, when they bought Elon's company, Elon briefly ran PayPal before he got fired there.
And Peter Thiel's Founders Fund is an investor in SpaceX, invested in Tesla, and so Thiel and Musk go a long way back. Thiel, obviously, Trump's right-hand man and almost his ambassador to Silicon Valley, has presumably helped broker some connection between these two. So there's the perception of this, you know, connection between Trump and Musk that could benefit Tesla, but also just the fact that Tesla develops cars. They make the cars here. They don't import like many of the other automakers.
I mean, you do have the bear case, though. Morgan Stanley analyst Adam Jones came out and said, look, Trump is not part of the investment thesis here. We're looking at the Model 3, which is in production right now. We're looking at the integrations from the Solar City. We're looking at this kind of made in USA thing. Doesn't fundamentally change the business itself.
Well,
so
and if the subsidies go away, I don't know if we expect clean energy subsidies to come out of Trump more than it came out of the Obama administration. So if those subsidies go away, this very expensive car gets even more expensive.
Probably see a lot of import taxes for their competitors.
We shall see about that as well. I thought this App Dynamics story, you're our IPO reporter now. You got the easiest job in the world last year because there were no IPOs.
No IPOs, almost no IPOs.
So you got lots of snowboarding, and we're happy for you for that. But this year we expected a lot of deals. This big deal this week got sort of snatched away from the public markets with Cisco buying App Dynamics.
That's right, $3.7 billion sticker price for App Dynamics, which was supposed to be the first U.S. tech IPO of the year. And Corey, I was looking at the numbers before this. There are no companies, no technology or communication companies on the road right now through basically mid-February looking to go public. So we have all of this talk about this going to be a busier year for IPOs. We have all of this kind of need for exits and need to have a better exit environment from Silicon Valley and the investors here. And we haven't really seen it yet. Obviously, Snapchat is the big company looming.
Right.
We still hear that's as soon as March, so first quarter listing from that big company. But in terms of the little ones, you know, we've written on MuleSoft aiming to go public as soon as the first quarter as well. There aren't a lot of names out there. But talking to sources around this App Dynamics deal, I will say the fact that it was bought for $3.7 billion when the market value was looking at closer to $1.7 billion had it listed, that premium is a good thing for companies considering going. It could potentially help with valuations for companies that do get out.
I'll say just that was a fantastically growing company, the fastest growing software company, would have been the fastest growing public software company, also free cash flow positive and profitable. There aren't a lot of companies like that in
Investors were excited. Investors were excited.